Hi, this is Alessio Rastani of Leading Trader. Hope you're well. In this video, we're going to take a very quick look at Facebook, which of course has been in the news lately, especially after its massive, nasty drop that it had. As you can see here, fell from nearly $217 all the way down, as you can see there, to nearly $175, a tremendous loss in the stock. Now, let me just say this before I take a look at the chart, which is that Facebook is not just any stock. In fact, as I'm sure many of you know this, Facebook is one of the 5 FANG stocks. That's F-A-A-N-G. In other words, Facebook, Apple, Amazon, Netflix, and Google. These 5 stocks, or FANG stocks, they play an important role in the overall stock market. In fact, they have a major influence on the major stock markets, especially the US markets. So that's why it's important to remember that, again, Facebook is not just any old stock. It plays an important part in the performance of the major stock indices. Now, as you will see from this chart here, in fact, I've just zoomed out of this chart of Facebook, you will see that despite the fact that Facebook has had this tremendous drop, so here's the rally. This is the rally that started back in March of this year to the top back in July of this year. And you will notice that what's happened is, so if that's the rally, this drop that we've had here, this drop, is actually a key level on the chart. This level is called the Fibonacci ratio. In fact, let me just show you. If I just do a Fibonacci retracement tool, all right, there it is. You will notice that that drop in Facebook has brought it down to a key level. It's called the 61.8% Fibonacci support level, which of course is the golden ratio. And notice that, in fact, Facebook has held this 61.8% level, held it so far very nicely. Now, there is only one thing, which is that even though we are at the 61.8% retracement level, nonetheless, we are below this trend line. That's the trend line we've actually just drawn here by connecting these two lows. So you can see we're below the trend line, and also important, we're below the 200 moving average on the charts. So if I just remove this Fibonacci levels here, you will see that yes, we are at support, but unfortunately we're below some resistance levels as well. And the resistance levels, again, as I mentioned before, is the trend line, but more importantly, the 200 moving average, which for many chartists is the threshold between bull and bear market. Now, here's the thing. What I'm keeping an eye on here on this chart of Facebook is I want to see what Facebook does in the next few days. Because usually what happens is when stocks or markets, when they usually break the 200 moving average, when they usually break this green line you see here, again, the 200 average, what usually happens is, again, this has been seen to have happened many times before, which is often price can break the 200 average, but then quickly recover and go back above it again. So I'm keeping an eye on that. I'm not saying it's going to happen, but we're going to keep an eye on that in case it happens. Because if Facebook, for any reason, reverses and holds the 61.8% level, and if it goes back above the 200 moving average, that actually can skew the balance of probabilities towards the bull side. Again, I think that if Facebook goes above the 200 average and closes above it, that can actually put a 55 to 60% probability that Facebook could rally from there. However, if Facebook continues to remain below the 200 moving average, again, below the trend line, then the odds at the moment favor further downside pressure. All right, guys, hope this video has helped. And if it has, please give it a thumbs up. And also, please remember to subscribe to our videos for future updates. Thanks a lot.